Hey everyone, John here from School of Trade. Today we're going to be taking a look at a long trade here on crude oil. There we go. Entry at 49.02. Stop is going to go underneath the low here. We just had the news come out not too long ago, and I'm looking for a lot of the buyers who missed this move. They're going to be pretty excited about catching a pullback, and knowing that they're going to be feeling like they missed that move up and seeing a very weak amount of sell pressure here, we have a very good chance that the buyers are going to start chasing this in when they get a good signal. And this last failure from the sellers turning straight back around is exactly that. It's a beautiful signal it's a twofold type of signal. It tells you that you don't want to be a seller, which means that you want to be a buyer, right? So we're looking for a move up, 49.02, the stop at 48.92. It's a 10-tick stop, so we're looking for a 10-tick target. Not a very big target by any means, but we do have potential upside movement that could allow us to get a pretty good move to the upside. But the first target's going to come off at 49.12, and you could take everything off at that 49.12 area. Given the fact that we have so many chunks of resistance in here, I'm really only going to be looking for a quick little scalp to the upside, knowing that there are going to be a huge amount of buyers jumping in and trying to shove the market higher. So this is where I'm looking, 49.02 to 49.12, quick little 10-tick scalp here. Stop is going to be just kind of left alone. Now, if we do close this candle, let's say the candle closes right now, that would tell us that, we haven't hit the target yet. That gives us a reason to move our stop higher, just to prevent a situation where you get whipped out. You don't want that to happen after it's gone close to your target at the very least. So this move up here, again, mostly just assuming that this is buyers who missed the initial drive up and they're going to be chasing it. Whenever it comes to inventory Wednesdays, which is pretty apparent that that's the inventory candle, that big old blue, that big old bull candle right there that's shoved higher, you don't ever want to trade the inventories because of slippage. If you've never experienced slippage, you're not going to get that on a sim account because, well, it's sim. The computer does its best to teach you about slippage, but it's not going to be anywhere near accurate. So practicing this type of trade where, let's say you buy the high and sell the low and wait for it to break out, it works awesome in sim, but then you trade it in live and you give back a huge amount of profit because it slipped you 20 ticks higher where you didn't actually want to get filled. So generally speaking, it's much better to wait for the reaction. I want to see what they want to do with this information. We're obviously bullish on that move. What do they want to do? Do they want to try to take it back? Do they want to keep it going? Are they just going to go into a range? And that's what we're looking to play in this case. So we get a very strong attempt from the sellers to take it lower, but terrible follow through. Buyers slam back up again, sellers try again, buyers come back in. So we can see that the buyers are dominating the market and the sellers aren't getting anywhere. So now we just have to wait for the sellers to fail, and that's exactly what we had right here, and that's where that little 10-tick scalp came from. So a beautiful play, skipping the news itself because of the immense amount of risk that you take on by trading the news, but instead waiting for the reaction and trading the reaction. So a beautiful little scalp higher, and that's going to do it for me. So if you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com, and as always, we'll catch you next time.